At the beginning of my trading journey, 90% of the trades I took will end up reversing and stopping me out, and I felt very frustrated. I had learned all the strategies, but I was missing one concept: liquidity. In this video, I will be simplifying how you can identify and use liquidity in your trading so that you can apply it and see improvement in your trading results.
What is liquidity? You want to understand what liquidity is before you start implementing anything that I am going to explain in this video. Liquidity refers to the price levels. Pay attention, levels. They're levels where most transactions are placed in financial markets by both institutional traders, known as smart money, and retail traders, which is you and I. Why do we care about liquidity? When you're planning your trades, you want to avoid getting trapped at levels where you should have exited your trade. So if you're already in a trade that is working out, where you want to be exiting that trade, and if you're in a trade, if you're not in a trade, you don't want to enter at those points because it could just reverse on you. So you want to understand liquidity because of to avoid those things. Liquidity zones are where smart money is positioned. If you're moving in the same direction as the big institutions, you've increased your odds of being successful. So you have better trade execution and you're now able to catch the big moves. There are three types of liquidity. You have the support and resistance liquidity, also known as demand and supply. And then you have the trend line liquidity. And number three is the most important one, the fake out liquidity. 90% of traders in the beginning of their journey would fall victim of fake out liquidity. It still happens to this day because nothing is 100% in trading. You would make mistakes, you would have those sloppy days. What matters the most is if you manage your risk. So I'm going to go over all three of them, and by the end of this video you would have a solid understanding. So make sure you watch the full video. So support and resistance liquidity. This is the basic concept that we all thought, that support is where buyers are looking to buy and resistance is where sellers are looking to sell. Now that we know that, we do not want to be buying as we approach resistance because that's where sellers are looking to offload prices down back to support. And support is where you will find buyers pushing price higher, and that's how the cycle just repeats. So you don't want to get carried away just because you see price pushing down. Oh, okay, let me just get in, and then you enter short only for it to aggressively stop you out of that trade. It can be very annoying. But once you're aware of the key levels, the most important levels, there are a lot of lines that you can draw on the chart, but you have to learn how to draw the important ones, the ones that matter, the levels that matter. Once you're able to identify those levels that matter, levels of interest, then you're able to avoid certain trades. I personally trade the break and retest, so I wait for resistance to flip into support, and then I take the retest. So the retest of this resistance level after we saw that buyers stepped in to finally push it higher after 2 attempts to push the price higher. The double bottom and double top is based on this concept of liquidity. Sellers come in, push price to a support level 1, and then sellers come again and push it back, and it makes the same equal lows as support level 1, and then you're able to buy. Sellers are present here, so that's why they're looking to sell. Sellers are present at this level, and it's 2 attempts. That's why you're looking to sell. It's not because it looks like an M or because it looks like a W, so you buy. That's not the reason. It's all liquidity. You have trend line liquidity. Trend line just don't show as support resistance. They show where stop losses are cluttered. And if you're able to visualize what's going on using a trend line, you use trend lines to visualize the price action. In this case, you can see a trend line that is showing that this uptrend is being respected. You have higher highs and higher lows. The trend line is holding the higher lows perfectly, and that shows that you are in a nice uptrend. Based on probabilities, it means that after the third touch, there's a high chance the fourth touch would still respect that trend line. So when you're looking at market structure and you're seeing a clean trend hold up and you draw a trend line, ideally you don't want to one, be shorting or selling into that trend line. Or, even if you're trying to short the market at that point, you want to be thinking about taking profits at that point because your higher low and your structure will still be intact by the time that trend line hits. Okay. Your bull flag is basically also composed of trend lines. Trend line 1, trend line 2, trend line 3. That's your bull flag. That's basically what your bull flag is, no matter how you want to draw it. It's either made up of, your slanting trend line with support and resistance liquidity resting above and below, or you have your trend line liquidity and it looks something slanted a little bit like this if it has like a slope. You don't want to anticipate the break of your bull flags, ideally, because it could actually just reject and you get stopped out. What I like to do is you wait for the break, you see the retest, and then you push high. If the retest doesn't happen, it's okay. You just move on. There's 1,000 names that you could trade. It must not be that one that you're watching. Opportunities will happen. Last but not the least, false breakouts and fake out liquidity. This one happens every single day. You see, sometimes you're watching, okay, if Amazon breaks 241, you can buy, only for that name to just, yeah, you're going higher. Okay, finally, maybe it might break this time. And then it gives you a false break and then slams back down. In this case, what I've even shown you is a double top. Sometimes some double tops are not perfect. You might not have equal highs. You can have a fake breakout only for it to come back down. In this case, how you want to now trade it is you wait for that confirmation that yes, sellers are present. This wick has showed you that sellers pushed this price lower and they said no, we're not going anywhere. And the moment you break this last bullish candle right here, you can then enter the trade and short it down to the next support level. The opposite is true for buy scenarios where you have a key support and you're thinking, okay, this time it's finally broken down. Or you might even be in a trade trying to buy and it just shoots down quickly and then reverses. I've seen that happen so many times. That's just liquidity happening. It's a liquidity grab that happened to push price in the opposite direction of the trend. So if you're a buyer at support and you see something like this should show you that buyers are very strong. And if that reversal happens, it's going to be sharp and it's going to be strong and you're going to catch a very big move to the upside. As you can see here, we broke the downtrend, changed character, and then pushed higher. Now I'm going to be going over examples using the real charts so that you can put it all together and you can see it play out for you, and then you're able to implement it in your own trading. So I'm just going to go over the basic support and resistance liquidity example here using the break and retest. We're going to trade this name and show you how to enter and how to set your stop loss on this trade. So let's replay the tape. So the first 5 minutes would form, we'll mark out our highs and the lows. So first 5 minutes has formed. I'm going to mark out the high and I'm also going to mark out the low. Funny enough, the low is really close to my higher time frame key level, but what we care about now is just watching to see what direction Google will take. So now I'm going to play it out and we're going to switch for the 1 minute to the 1 minute time frame just for simplicity and so we can see what's happening. But here we go. We're gonna watch and see if we break to the upside or if we break down, and then we'll be looking to take a trade. It's very boring, just waiting for it to play out. Now we have picked a direction, we are moving higher. So now we're just going to wait and see if we retest and we're going to find an entry. I've not set the stop loss yet, so just let's be mindful. Let's wait for the entry, but ideally we're waiting for a break and a retest, and then we would set our stop loss. She's coming back down. Okay, let's see, buyer stepping in. Okay, now we are going to look to enter here. Stop loss is going to be very tight, and we are going to have a 1:2 risk to reward right here, and we're going to buy right now. Let's play out the tape. There you go. There you go. See? And then you exit the trade once it hits your target. It's just that simple. You wait for the break and the retest. And as you can see on the 5-minute time frame, even it was a strong candle close that broke above this 5-minute range high. So that even gives you confidence that this is a high probability trade. Now we are going to replay this NVIDIA trade. If NVIDIA breaks below 186.16, this zone, and shows strong sellers and then eventually retest because it's a key level, then we'll take a trade to the downside. But if it doesn't show confirmation, or we end up chopping around, obviously skip this trade. Hopefully we can get a good example out of it, but I will just play it out and we'll follow the same steps we take to take trades. Let's see. Okay, first 5-minute candle has formed, very strong. Sellers are in control after the first 5 minutes, right? So now we would now go down to the 1 minute and see if we get that strong displacement down to the upside or to the downside. You can see that there was strong indecision for the first 5 minutes. It wasn't a strong convincing downside move for the first 5 minutes. Okay, we're breaking below now. Let's see if we get strong enough displacement. Okay, it's broken below. You know why I did not take this setup? I did not take it because yes, there was a red candle here, but we did not have strong displacement before this retest of this first 5 minutes. It might as well be a fake out trade. Let's see if there's an opportunity for a good retest after it gives us some more displacement. Immediate rejection. We can't take this trade because we don't have a clean risk to reward. You're basically shorting into low of day, which is a trap. Okay, now let's see how this green candle reacts. If this green candle comes up here and we see sellers try to push the price down, then we'll probably look to take this trade and target the lows. Let's see if an entry presents. It's a strong bias. Now, this is an example. I don't even know if it could get better than this. This is an example of fake out liquidity, where it looks all nice and dandy that yes, we could break down, but eventually buyers stepped up aggressively. When it formed this bar, it's showing that buyers were stepping up. And when we had this strong close at our area of interest, it's a sign that yeah, maybe just skip out on this trade and see how we closed above that level. Now I'm going to continue playing it to show what eventually happened. Let's see. In this case, there's a high chance that it would reverse and even break above this highs. My goodness. Okay, let's speed it up a bit. There you go. This is an example of fake out liquidity. With fake out liquidity, usually when this type of thing happens, where your people are looking to go short, it gives you a little bit of a move and then reclaims the levels. When you see levels start to reclaim, it shows that there was a failure to go lower, and most of the time you will see sharp reversals in the opposite direction that can pay big. I think that would be it for this video. I will continue to build on this concept. If you have questions, ask me in the comments and I'll do my best to answer. Thank you so much for watching. I appreciate you. Until the next one.